Boo! At the open, our all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this. Becky quick. While the average man looking at this sad like she fine as it. I'm over here looking at tails and whips like 5-6. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETFs, making profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. and I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them cans, make profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang, making profits. We some snipers.
Hey, yo, what's up, everyone? What's going on? Welcome. Happy Friday. Welcome to the True Trading Group live stream. My name is Michael Edward. Paranaughty. I go by Michael Edward. I'm the co-founder and head trader at True Trading Group. We are the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, and individual mentorship and coaching for stocks, options, crypto, and futures. We also we day trade, we swing trade. We also cover long-term investing. There's literally something for everybody here at True Trading Group. We are also the recipient of the Best AI Analysis Tool Award at the Global FinTech Awards that are hosted by Benzinga. My business partner and I actually were at that award ceremony just a few months ago, receiving that award for Best AI Analysis Tool. Very happy and proud to have industry leaders like Benzinga recognizing True Trading Group for what it is that we are doing with implementing AI technology into our platform to help all of our members to make money. At the end of the day, that's what we are all here for. If you're wondering why I should listen to anything it is that we discuss on this channel, it's not because I believe that I'm the world's greatest trader. It's because I was trained by professionals on Wall Street. My first job out of college, working at T3 Alpha Fund in New York City. While there, they had me go through a training program before they let me touch $1 of the firm's money. Then 2008 happened, which was the Great Recession, the big stock market crash. But it was also the same year that I received one of the firm's Trader of the Year awards. Now, you fast forward, I'm the co-founder and head trader of TTG, and along with my team of 8 other professional full-time trading mods and an over 30-person staff, we have helped thousands of members from all over the world to reach their goals. We have over 10,000 members in 114 different countries. We are truly a global community here at True Trading Group. So if you guys are ready to learn, trade, and profit for real, you've come to the right place. 6 nights a week, Sunday through Friday, we go live on this channel with myself, other mods, and sometimes some special guests. We'll give you guys golden nuggets, free lessons, education, trade ideas, and commentary that can help you guys all become better traders and help you guys make money. Again, that's what we are all here for. Wow, way to go, Ryan. Way to go, Ryan. Ryan says, hey, yo, what's up, fam? Mike, Adam, and Joe. Huge day. Biggest single day I've ever had trading futures. Nice way to finish the week. Let's go. It was a huge day inside of chat today. No, it really is kind of crazy because we have had such massive weeks in like True Trading Group as a whole have had just such massive weeks between the moderators and members. The analysis that we've had and that we've given we've also given the analysis on this YouTube channel. The analysis that we've had over the last couple of weeks has just been absolutely spot on. And I'm not saying that, but listen, we're not going to be right every time. We're not. We're going to have red trades too. But these last couple of weeks, we've just been all over this. We really have. It goes all the way back honestly, to this day right here, which was February 21st. And on February 21st, when we had that drop, we failed the new all-time high. And we came right here on this YouTube channel and we said, listen, that's a major technical breakdown. And I think you're going to see now, a profit taking that is going to take this market lower. Now, at the time, we didn't know anything about, what was going to happen with tariffs or anything like that. And the tariffs have helped accelerate the markets to the downside because of the uncertainty. And we've caught this whole move. Honestly, like we've been all over this move to the downside, put options, short futures, short different equities. It's been a fantastic run. And then we identified support levels. Right. We talked about support levels that we can look for bounces to try to capitalize on off of that. And we've been able to kind of switch things around. And we've been able to be short in the morning and catch bounces in the afternoon because these support levels are just spot on. The support levels have literally just been perfect. When you take a look here and you look at like today, and this is right from even if you're on the YouTube channel, I told you guys that, hey, listen, I think that the 200 day is going to break. We're going to drop into 565. And then that's where I think you try to bounce. 560. I'm not pulling these numbers out of thin air, right? Like 565, I said was a huge level of support because it used to be the previous all-time highs that were back here in July. And then again, let me draw this back. There's July, there in August. You broke above it in September, and then you reset back against it, and it became support. And then you had the rally, and then you had the election, the big gap up, you have all-time highs, and then you dropped right back down into that exact same level, that previous breakout point that was a prior all-time high. You broke it, you sat on it, it held, that confirms the level. So then when you drop back into the level in the future, you can go back and you can rely on that level to be a key area of structure. And as you drop into it, the markets got oversold. Then that's really all that it was today. Today, the markets got oversold. And today, we even said, guys, listen, I think that today, the whole game plan coming today was short early, bounce late. And it was short early, break the 200 day, drop into structure at 565. And then that's enough of a support level that you can try to bounce off of. That's why people like Ryan had such big days. War Sports says, why a good week? Because honestly, we just crushed it. It was a huge money-making week. Ryan says, volatility up and down. You can catch it both ways. If you know what's up, you need to know technical analysis. TT shows you how. I was done in an hour and I went to work to run my business. That's incredible. Ryan, great job, man. Honestly, this is an amazing trading environment because the volatility is through the roof. You're not getting like little $2, $3 ranges on the SPY throughout the course of the day. You're getting $10, $11, $12 ranges from high to low. And that just provides with such incredible opportunity. Triple digit gains today on zero DTE call options and put options on the SPY. And then obviously some monster point totals trading futures. You know, in what way, how do you crush it? Teach me. War Sports. I mean, it'd be my pleasure to teach you. We have over 10,000 members in 114 different countries that are WT says join TTG. And honestly, anybody that's not a member of True Trading Group, I'm telling you, if you guys have been worried about this decline, you know, if you guys been worried because your 401ks are dropping during this decline, we've been having some really big green days actively trading, whether it's day trading or swing trading, because that's what volatility provides. You guys have to learn. You can't only make money when markets go up because markets don't just go up forever. You have downward movements that happen throughout the course of the years. It is totally normal, and you want to be able to take advantage of it, make money on the way down, and then you can take that money that you just made and you can then roll it back into your 401k or your long-term portfolio, your IRA, whatever it is, and you can use the profit that you generate on the way down to then buy more shares of the stocks you like at cheaper prices. And then when the markets recover, now you got much bigger positions, and that's how your portfolio grows, right? That's how it works. Honestly, that's how it should be working. But a lot of people they panic when the markets go down, and you start to get people saying, "Oh, what do I do? What do I do? What do I do?" I mean, what do you do? You got to learn how to take advantage of this. That's what you got to learn how to do. You got to learn how to take advantage of this type of stuff because members of True Trading Group are making money during this crazy market, guys. They really are. You don't take my word for it, guys. Members, go ahead and type the number 1 if you're making money. Type the number 1 if you guys are making money and you're becoming better traders because of TTG. Just go ahead, type the number 1. Those of you that are not members, just pay attention to the people that you see. Type the number 1 in chat because this is what it's really all about. It's really all about you guys being able to make money. I grew my account. That's insane. Come on, Jared. Are you serious? Are you sure it's not 70%? Did you really grow your account 700% in a week? That's not a typo? Because that's insane. Well, you must have had a small account to start with, but that's insane. If that's true, that's absolutely insane. If that is in fact the case. That's insane. So yeah, listen, War. I think what was that username? War Sports. I think it was. Yeah, War Sports. Listen, if you guys are not members of TTG and you guys want to join, you can go to ttgoffer.com. Everything on that page is included. Okay, you get the full curriculum, 22 course curriculum, simplified and expanded upon version of what I learned working at the fund in New York. You get Benzinga Pro's newsfeed. You get the trading views premium charting software, the trade idea scanner, unusual options activity, options flow, dark pool data, short data, congressional trading data, 1,000 hours of our video library. It's all included. You guys don't have to pay anything extra for any of that stuff. Okay. It's all part of it. It's all included. The membership will cost you $1,047 for the year. We do offer a double your money back guarantee if you can't make the $1,047 back. So the way it works is you join, you pay $1,047 for the whole year. Everything's included. You see on that page. And if you go through the courses, pass the quizzes, and attend a study group, we do study groups every week. They're free. I'm asking you to attend one. If you do those things and still can't make enough winning trades to equal the $1,047 membership fee at least once, we'll give you back $2,094. That's how confident we are in the platform that we have created and its ability to help you reach your goals. That will offer you double your money back if you can't make back the $1,047 membership fee. Okay. We do that because our refund rate is less than 2.5%, and it's to prove to you how much we believe in the platform and to give you peace of mind and to allow you to hold us accountable for what it is that we're saying here on this stream. That's why we offer it. So you guys can go to ttgoffer.com now and sign up. If you have any questions, just send a text message to 1-888-621-2127. Again, that's 1-888-621-2127. Phone number is right down there at the bottom of your screen. You guys can text that number with any questions that you have. Now, also, we are doing a giveaway on March 30th for non-members. If you guys are interested, it's totally free to register for the giveaway. There's no credit card needed or anything like that. It's free. We're giving away a full trading station that is worth around $4,500. So if you're interested in that, go to truetradinggroup.com/KISS. That is truetradinggroup.com/KISS. And you guys can register for that giveaway. Anyone that signs up for an annual membership to True Trading Group, though, you'll get 4 additional entries into the giveaway, which means your name will be in the giveaway 5 times if you guys join the annual membership. So go to truetradinggroup.com/KISS to register for the giveaway. And then you can go over to ttgoffer.com, sign up for a membership, and you'll get 4 additional entries into that giveaway. And of course, the double your money back guarantee and everything else. Okay. So you guys have that. Quick little announcement today. I couldn't help myself today. I nibbled on a couple of things today in the long-term portfolio. Nothing crazy. Nibbles. I do think the markets go lower over the course of the next month or so, but I did nibble on a couple of stocks today that I just couldn't resist. I just felt like they were down too much, or they were down enough where I'm like, I got to buy something. I got to buy some shares. So I took some nibbles today. And I'm going to give you the list of the stocks that I nibbled on. Again, these are nibbles. So like 10% of the money you would allocate to a position. They're not full buys. My full buys are going to be at some lower prices. But I just feel like some of these stocks were down enough and they were at some levels that I just couldn't resist. So I nibbled on a couple. And I'm going to go through them with you guys. The first one is Tesla. I nibbled on Tesla today. I just think this is enough of a support level. Here, you guys can see all this resistance back here in 2023 and 2024. And we dropped right into it. And there's all your major moving averages on the weekly chart. I just said, you know what? This is enough. This is enough of a pullback. I'm going to grab just a couple of shares. So that's exactly what I did. I grabbed more than a couple of shares, but, I just took a nibble on the position. I already own it. I own it from lower prices, but I took a nibble. I added some. I also took a nibble on AMD. AMD just got to a level that used to be resistance in 23. You broke above it. Then it was double bottom support in 23. You rallied. You just dropped back down into it. I said, okay, that's a nice level. I like that level. So I'm going to buy some shares. Again, I already own AMD. I own it for much lower prices. But I added to the position today with a little bit of a nibble. Again, these are nibbles. They're not full buys. So don't at me a month from now if the market's low and you're like, ha, 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 because I'm going to be buying my bigger pieces at lower prices. But I just felt like these were some good enough levels that I just said, you know what, let me just buy something. That was AMD. I took a nibble on App11, APP. I just liked APP down here around like 230. We got to like 240 or 250, whatever. And I just said, yeah, you know what? I'll just grab a couple of shares right there. I mean, more than a couple, but you know what I mean? That's App11. I took a nibble there. I also took a nibble on ServiceNow. ServiceNow got into an area of support that I like. I like 800. We got into like 30s. I said, all right, whatever. I'll just buy a little bit. Again, these are nibbles. My bigger buy for service now, if we get there, is going to be the 700s. The 700s is where I'm going to take a big bite. I also took a nibble on Cloudflare. Cloudflare is at a level that I just said, you know what, why not? I like it. And it's 120. Okay. And this level used to be resistance back here in 2022. Then it was resistance again here in 24. And then resistance again here in 24. You broke above it. And then we just pulled back in and we just sat back against it. So I said, all right, I'll take a nibble. All right. That's NET. That's Cloudflare. I also nibbled on some Kava. All right, I nibbled on some Kava. Again, I also own Kava, again, at lower prices, but just figured we were getting into a level here that I said, all right, why not? So there's the level. You guys can see back here, resistance. Then we broke above it, support, and we dropped right into that zone today. So I just said, all right, I'll take a nibble. Right? Just said I'll take a nibble. Okay? So that's what I did there with Kava. I also took a nibble on some Starbucks. I am bullish on Starbucks for the next couple of years. I think this stock makes a new all-time high. We broke out of this big descending triangle pattern, okay, a couple weeks ago. You can see this downtrend line. So we broke through it, and then you pulled back into retest that downtrend line. I said, okay, I'm going to grab some, right? And we're going to see if Starbucks can get moving back up to the upside. I think Starbucks makes a new all-time high in the next couple of years. I like the new CEO. And I think we can see this thing, move higher over the course of the next several months and a couple of years. So I took a nibble there on Starbucks. I also took a nibble on Broadcom. Broadcom, just again, the stocks have just pulled into levels that I just couldn't resist, right? Resistance. You have the huge earnings gap up, and now you just dropped right back. Where? Into that level. I said, all right. You dropped right into that level. I said, all right, I'll scoop some up. And that's exactly what I did. So I nibbled on that position as well. Now I also own Broadcom from significantly lower prices. I bought Broadcom back in 2022, 2023, and I also added in 2024. So I own Broadcom from much, much, much lower. But I nibbled and I added to my position there. I initiated brand new positions, meaning this is the first time that I am buying them, but they are still nibbles. VST. I did nibble on some VST today, and this is just got to a level that I just couldn't resist. I said, all right, I like this level, right? This used to be the pivot top from 24. You broke above it, and then it became support, and now you dropped into it here today. So I said, all right, I'll scoop some up. I'll buy a little bit right there. I don't mind that. My large purchase for this will be around 90 if we get there, but I did go ahead and take a nibble there on VST. And then last but not least, I initiated a position in the IGV ETF, which is a software ETF, and we got to my buy point. My buy point was the low 90s. We got there today, and this is an initiation of a first entry position. There's your resistance, and you broke above it. Now you pulled back down into it, and now we're looking for that level to become support, and now we look for the IGV to bounce back up to the upside. This is also a textbook cup and handle. There's your uptrend. There's your cup. There's your handle. There's your breakout. There's your retest. And then we're going to look for your continuation follow through. Okay. So these are some of the names that I just took some nibbles on today. VST and IGV are first time positions being initiated. The others are nibbles and adds to existing holdings. But that's what I did today. Okay, that's what I did today. And the reason for that is just like I said, I feel like these stocks were just down enough. They got into some levels and some prices that I just really liked. And I went ahead and I nibbled on some. My view, my outlook on the overall market really has been one that really hasn't changed. It really hasn't changed. Coming into 2025, I've been in the camp that we're going to get a correction, but not a recession. And I publish a market outlook report every year for our members. It tells people what I think is going to happen for the year and what stocks I'm targeting to purchase. And in my report, which was issued in the beginning of January, I said that I believe that we're going to have a correction this year. I think we're going to have a growth scare. And I do believe that we are in the early stages of a growth scare. We haven't quite had a correction yet in the S&P. We had a correction in the NASDAQ. A correction by definition is a greater than 10% drop off the high. The NASDAQ has fallen into correction. We were down, I think, around 11% or so on the NASDAQ, but the S&P was only down around 7% or so. So we did not fall into a full-blown correction. Now, historically, most 5 to 9% pullbacks in the S&P are buyable, most of them. So there are 5 to 9% pullbacks are extremely common. They literally happen every year on average. Corrections are also extremely common. Corrections are 10 to 19%. The average drawdown in any given year is actually around 14%, and that's a regular run-of-the-mill correction. And that is exactly what I believe that we're going to see this year. Yes, I think the markets can bounce off of this 565. Yes, we've talked about that for a little while here at True Trading Group. Yes, a lot of our traders took longs off of 565 on the SPY today and caught that nice afternoon bounce. It was a big day inside of chat. And I'll just I'll just show you guys. Let me delete the one line so there's no confusion. There it is, this level that used to be resistance, right now acting as support. And that's why we said when we drop into that level, look for a bounce. That's exactly what happened. We'll go to a 3-minute chart just to show you on the 3-minute. You dropped into that level, then there's the bounce. A lot of traders are able to capitalize on this bounce in the afternoon and have some really big days and go into the weekend with a big smile on their face, while the rest of the world is worried about tariffs and a recession. So I still do think that this level breaks. I don't think that today is the bottom. I think that the sell-off so far has been very orderly, and I don't think there's been very much fear at all in this. It's just kind of like a worry, but not real fear. So I really don't think that the market's kind of bottomed itself yet. I think that over the course of the next month, we can go lower. I think there's going to be a lot of volatility leading up to the April 2nd deadline for reciprocal tariffs. And I also think that, like, I'm starting to think that, like, the markets may even, the way that all this can work out, the markets can end up bottoming in like April, because I think there's going to be so much volatility going into the deadline for reciprocal tariffs, because reciprocal tariffs are no joke. If we put a tariff on everything, you know, if we put the same amount of tariff on other countries as they have on all of ours, that's going to be nuts. You have countries that have 100 to 200% tariffs on some products. If we turn around and slap that on theirs, you know, it's going to be wild. It's really going to be wild. So I think there's going to be so much volatility and so much uncertainty leading up to that. And then you're going to get another labor report the first week of April, which would be the labor report for March. And I know the labor report we just got today wasn't that bad. It really didn't really show signs of of real weakness. Unemployment rate still 4.1. You know, I mean, 4.1 is still low, but I think that as time goes on, I think as months go on, I think you can start to see some more cracks and some more weakening in the labor report. And I just think to myself, like, post April 2nd, if we have reciprocal tariffs get put on, now again, I don't think those tariffs stay on very long, but if we have them on and you get a weak labor report, I think the markets, I think that's when you can have like your peak fear moment of like, oh no, here comes a recession. And then the tariffs might come off, and then the Federal Reserve may start cutting rates in June. And I think if people begin expecting the rate cut in June, that the markets actually bounce into the June Fed meeting, and then the Fed can start cutting rates. And if the Fed starts cutting rates, and if tariffs are off, and that's the big if. I don't know if that's going to be the case. But if tariffs come off and the Fed starts cutting rates, I think that's a recipe for the markets to move higher. But that's a big if. It's a big if. I don't know if that's going to happen. I'm just telling you, if it does, I think the markets are going to recover. So, but if you fast forward until let's say it's September, October, and we're still talking about tariffs, the chances of a recession then at that point, I would say, would be pretty high. But I don't think that's going to be the case. I really don't. I don't think that come Q3, we're still talking about reciprocal tariffs. I think that things will be negotiated. I think things will change. Things will be relieved. Certain parts of tariffs will be relieved. Certain trade agreements will be renegotiated, and we can get those tariffs off. Hopefully we can get those tariffs off. Because if not, the chances of recession going into the end of the year and then going into 26 would probably be pretty high, I would say, if we still had reciprocal tariffs on at the end of the year. So I'll adjust accordingly if that's the case, but I just don't think they're going to be. So that's why, I think that you can have the market's bottom maybe sometime in the spring. And that can be like the peak fear moment where it's like, oh no, reciprocal tariffs. Oh no, labor market weakening. But then all of a sudden the tariffs come off and the Fed cuts rates. And the one thing that I've learned is not to fight the Fed. You don't fight the Fed either way. You don't want to fight the Fed when they're raising rates, and you don't want to fight the Fed when they're cutting rates. But we got to see. There's a lot of ifs, guys. There's a lot of ifs. There's a lot of uncertainties, and that's why the markets have moved down. Uncertainty equals risk. When the markets can't see 6 to 9 months into the future, they usually pull back. When there's factors and catalysts and variables that are completely unknown, the markets usually start to pull in. And that's a pricing in of risk, because uncertainty equals risk. So in order for you to price risk in, the markets need to come down to account for that. And then as you get more clarity, then that risk can start to come off and the uncertainty starts to fade. And then the markets can start to reprice themselves and can start to move higher again, and you can get a risk on environment. But I will caution you with this. And I really try to really tell you guys what I think you need to hear based on just my experiences and my knowledge of markets and everything else. I've been doing this for a long time. I've been doing this for over 18 years. Try your hardest. I know this is going to be difficult for some people, but it shouldn't be. And shame on you if it is that difficult for you to do this. I don't care what you think of Donald Trump. I don't care if you love him or if you hate him. Do not let that lead you to a conclusion of what you think is going to happen. Just because you hate him, don't think he's going to screw this up royally. And just because you love him, don't think he's going to get this perfect. Pay attention to what's happening, okay? Whether you like what's happening or you don't like what's happening, I don't care. Just pay attention to what's happening and look and say to yourself, what's the market's reaction going to be to a particular set of outcomes? And rather than you try to guess the outcome, adjust on what the outcomes actually are rather than trying to guess it. Okay? That is, that's, I think, one of the best pieces of advice that I can give you. And that's not just this year. It's for the rest of your entire investing career. And I just don't think that the bull market that started in 2023 and went into 2024 on the back of AI and this advancement of technology and this like new age of technological revolution, I don't think that's just going to disappear because of tariffs. I don't think we're going to have a bear market this year. I could be wrong, but I don't think we're going to have a bear market. I think we're going to have a correction. A correction is 10 to 19%. And I'm going to be aggressively buying that correction if we get it. I'm going to be aggressively buying that correction because we had a bear market in 2020. We had a bear market in 22. To have another bear market in 25 is statistically, historically, incredibly rare. Bear markets happen once every 4 to 6 years. You've already had 2 in the last 5 years. 2020, 21, 22, 23, 24. 5 years. 2 bear markets within that 5-year span. So you're way ahead of schedule. To have a third bear market in 6 years, 3 bear markets in 6 years would be statistically incredibly rare. That's why I don't have that as like my base case scenario. It could happen. I'm not saying it can't. I'm not ignoring all of the negatives. Yes, I think that the tariffs if tariffs are on months from now, it's not going to be good for the economy. Yes, the labor market is weakening. Yes, we're cutting spending from the government, and spending from the government is a big part of GDP. Government spending accounts for like 26, 27% of GDP. Yes, I hear all of these things. I really do. Yes, credit card debt is at an all-time high. Yes, auto delinquencies are at the highest they've been since 2008. Yes, 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 yes. All of those things are true. No, none of those things. None of those things are good things. No, I'm not ignoring any of those things. But I think it leads to a growth scare, not a recession. And if I am wrong about this, I will come right back on this live stream and I will be like, damn, I was wrong. We're in a recession. Okay. And I'm going to explain to you why the recession would have happened. My guess is if we have a recession, it's because tariffs were on for too long. That's going to be my assumption. And if I'm wrong, but that's what I'm saying. I don't think tariffs are going to be on for that long. And if they are on for very long, then that's going to be how I'm wrong. Okay. But that's a variable that I just don't know. I made this analogy the other day where understand the difference. There's not a right answer somewhere, right? Like nobody knows what's going to happen with tariffs. Meaning like who's going to have a tariff on, how much is the tariff going to be, who's not going to have a tariff, who's going to get relief, who's going to get higher tariffs, how long are the tariffs going to be in place, what country is going to renegotiate a trade deal. We don't have any of that information. There's 100 different ways that can play out. So there's not a right answer somewhere written on a piece of paper and locked away in a safe. Everybody's guessing. Everyone's guessing. And I equate it to like, you ever in grammar school, the jar of jelly beans, and all the kids would have to guess how many jelly beans are in the jar. And if you win, like your class gets like a pizza party or whatever it was, right? There's a right answer to that, right? There is a correct answer to how many jelly beans are in that jar. There is a correct answer right now. It exists. There's a correct answer. Now we all have to figure out what it is. Now that's very different if I drained my swimming pool and I got a fire hose of jelly beans and I'm just pouring jelly beans into my pool. And I'm like, listen, you need to guess how many jelly beans are going to be in this pool when I'm done pouring, but you have no idea when I'm going to stop pouring. I might stop pouring in 1 minute. I might stop pouring in 5 hours. I might stop pouring in 3 days. You have no idea when I'm going to stop pouring, but go ahead and guess how many jelly beans are going to be in that pool. You understand how at that moment, there's not a correct answer? There is not a correct answer to that question yet because the variables have not played themselves out, meaning when am I going to stop pouring? I don't know. So no, there is not a correct answer. That's very different than, hey, there's jelly beans in a jar. Guess how many are in this jar? There is a correct answer. The variable is finished. There's no more jelly beans going into this jar. We don't know how long these tariffs are going to be on for. The tariffs could come off in 2 weeks. The April 2nd reciprocal tariffs could never happen. Or they could be placed and they could come off April 17th. They might come off May 8th. They might come off July 10th. They might come off November 1st. We don't know. That's the variable that could make my analysis right or wrong. Okay? And I want everybody to understand that. And I have no problem coming on this YouTube channel and making my analysis very public for everybody to look back to and be like, wow, this guy was spot on, or wow, this guy was completely wrong. I don't care. I have no problem coming on. I'm confident enough in my analysis and my education and my skill to tell you what I think is going to happen, not just talk about what already did, because that's easy to do, right? I'm not a Monday morning quarterback. I'll tell you guys always what I think. Agree with me or not, I just tell you what I think, and I tell you what I'm doing with my own money. And I'm telling you now today that as we have a correction, I will be aggressively buying that correction. That's very different than 2022. 2022, my outlook was a bear market in 22. I sold half of my entire portfolio September into October of 2021 because I believed we were going to have a bear market. And I didn't do my aggressive buying until the market had fallen more than 20%, meaning we entered a bear market. Bear market is 20% or more down. So once we were down like 25%, that is when I did my largest, most aggressive buying, because that was my analysis was a bear market. So I waited. I bought a little bit during the correction. I bought some down like 15 or 17%. And then I bought big down like 25, 26%. Okay. This year, I'm not expecting a bear market. So I'm not going to wait for a 25% decline to buy big. I'm telling you that once we are down more than 10%, I'm going to start buying. And if I'm early, I'm early. And if we have a recession and the tariffs stay on and I'm wrong about it, then it is what it is. I would have bought early. I'll be down on the positions that I bought early. And then I'm just going to buy more. I'm going to dollar cost average down as we would fall into a bear market. And if I'm early, I'm early. And within 1 to 2 years, I'll probably be back into the green on those ads. I'm not really that concerned. I'm not that worried about it. I'm more focused on the long-term potential of a technological revolution with AI technology than I am the short-term disruptions of tariffs, because tariffs are short-term. It's not the same as like the Fed adjusting monetary policy, because that takes a long time to filter through the economy. Tariffs could go on and they can come off like that. And I don't think I'm more focused on this process being a disruption and causing a growth scare and a slowdown and a readjustment, rather than I think this is going to derail all of this AI technology and all these advancements. So I still think that we're going to have, a technological boom over the next several years as the Fed cuts rates and tariffs come off and AI advances. And I'm putting my money to work accordingly. Maybe I'm wrong. And if I'm wrong, I'll come right back on here and say I was wrong. It's all I could do. Okay? It's all I could do. So there you guys go. I nibbled on a couple of things today. Nothing crazy. They're not even tier 1 purchases. Just little nibbles. But I'm really targeting, us to drop down into like the 550s or so on the SPY. And then that's where I'm going to really start to be aggressively buying. Okay? So that's it. All right? Hope you guys have a wonderful weekend. Congratulations to all of our members. Just a monster week. It really was a monster week. And I got to give a special shout out to Shy. One of our moderators had banner week. I think one of her top 3, biggest weeks that she's had. So big shout out to Shy and all the members that have been following along with those trade alerts. Diane had a big week. I know Colin had a big week trading futures. Just a really, really, really excellent, some excellent trading performances by the moderators and the members inside True Trading Group. So congratulations, those of you that had some big weeks. I expect more volatility next week. The markets may try to bounce back into the 580s. I would look for resistance in the low 580s and try to fade that pop into the low 580s in the SPY. But I'll go live on Sunday on this YouTube channel at 6:30 p.m. Eastern, and I'll give you my outlook for the week, and we'll talk about what I expect for next week's price action and for next week's trading. Okay? If you guys are not yet members, go to ttgoffer.com. Again, that's ttgoffer.com. Everything on that page is included in your membership. It's $1,047 for the whole year. You get a double your money back guarantee. Everything that's on that page is included. The double your money back guarantee works as follows. You go through our courses, you pass our quizzes, you attend one study group. And if you can't make your membership fee back at least once, we give you back $2,094. It's as simple as that. Our refund rate is less than 2.5%, so I have no problem doing that. Our retention rate amongst our members is well into the 70s. We're 4.6 out of 5-star rated on Trustpilot. So go to ttgoffer.com to join. If you have any questions, text us 1-888-621-2127. Text that number now. Whatever you guys need help with, we're fully transparent. We're an open book. Anything you want to know. Have a wonderful weekend. Subscribe to the channel. I'll see you guys on Sunday night. Take care, folks.